We are beginning day 2 of PDAC here in the North Building, just across the street from the CBC, and I'm very delighted to have with me here to start the day Assistant Secretary of Energy Audrey Robertson, who manages the Office of Critical Minerals and Energy Innovation. Assistant Secretary, welcome. It's great to have you.
Adrian, thank you so much for having me. I am delighted to be at PDAC.
Well, it's great to have you, and one of the delights of being at PDAC is seeing and meeting people like yourself face to face, so it's great to have you. And of course, we've seen especially in the last year since April with the rare earths, we've seen a real intensity in the global news narrative, especially out of the United States, on critical minerals, natural resources. And so tell us a little bit about what you're doing at the Department of Energy with this Office of Critical Minerals and Energy Innovation. What are you guys up to these days?
Sure thing, Adrian. Well, the office is a mouthful, I agree. But the intention behind this office was to consolidate within the Department of Energy functions that relate to the full spectrum of minerals and mining. So the Bureau of Mines was active for over 80 years, and in 1996 it shut down, as you probably know. Lots of different areas went to different parts of the U.S. government, and the Department of Energy became essentially the repository for all of the R&D activities for mining, processing, and recycling. The Department of Energy, as you may or may not know, is the home to 17 national labs and really the core of scientific innovation in the U.S. government. And so we do a lot in energy innovation. We do a lot in pure basic science. Things like the AI effort for the U.S. government is at the Department of Energy. In particular, this new office was gathering all the different parts of the mining supply chain. So from mining and mining technology, from using our subsurface resources that we've used historically for oil and gas and geothermal to help more innovative mining strategies, all the way through processing, different forms of processing, innovation in processing. We also house now all of our metallurgy and other components related to using processed ores and turning them into valuable products. And then the products themselves. This is also where our battery and magnet activity takes place, as well as recycling for all of the above. And so the intention was to take all of these different areas across the Department of Energy that have been essentially popped up over the last 50 to 80 years and pull them together in order to unify the approach. And why unify the approach? The United States government's been talking about a critical minerals problem for 15 years, and we haven't done anything about it until the last 15 months. And so under the leadership of President Trump, we have been given the green light to make a big difference. And that's why I'm here. That's why this office is one of the newest offices of the Department of Energy, one of the largest offices of the Department of Energy, and it has the full faith and support of both our Secretary of Energy and the President himself.
It is so interesting. So just to see if I get this right then, so the Department of Mines, was that what it was called?
The U.S. Bureau of Mines.
U.S. Bureau of Mines. Was that basically the agency that basically oversaw mining in the United States and the whole, acquisition of metals or management, so to speak, of metals in the country, and that has been, in effect, been replaced by this office, or not? Could you just help clarify that?
No, I would say that is not the case. So the U.S. Bureau of Mines was part of the Department of the Interior, and when the Bureau of Mines in 1996 was shut down, parts of the Department of Mines, specifically the resource management, stayed at the Department of Interior. And so the USGS is in the Department of Interior. It houses the critical minerals list, for example. It tracks and manages all of the resources around the United States. It is part of the USGS. It is part of the Department of the Interior. But the R&D for mining and processing and mining equipment came to the Department of Energy. In the past, it had been in different areas of the department. Most recently, this activity was in the Office of Fossil Energy.
Okay.
But it has its own office, and it is the full supply chain. Does that clear things up?
I'm not sure, but it helps. It definitely helps.
Sorry, Adrian, but it's a concerted effort to focus resources not on a full spectrum of technology, but really on all of the technologies that relate to mining, refining, processing, and building things with critical minerals, again, in the United States.
Okay, excellent. And so, to a certain degree, zooming out, what is top of mind then for you these days as Assistant Secretary and as part of this, new Office of Critical Minerals and Energy Innovation?
So our focus is really on the R&D and scientific advancement of critical minerals, mining, processing, and metallurgy, and then the related industries. There are lots of different areas of the United States government that focuses on critical minerals. And as I said, never before have we had the green light as a critical minerals group to not only work together, but to work fast. And I think that's indicative of there's a new effort spearheaded by the White House to pull together the Department of War, the Department of Commerce, the Department of Treasury, the USTR, the Department of Energy. We all get together multiple times a week to talk about and be on a unified path to how we are solving this problem. And the result of that, billions of dollars deployed, both directly as equity investments in companies through my colleagues and partners at the Department of War, the Department of Commerce. I'm sure you've seen companies like MP Materials and USA Rare Earths hitting the headlines, but there's far more companies you maybe never have heard of across the world that are the beneficiary of this united government effort to solve both the near-term challenges of critical mineral scarcity and processing scarcity within our borders and the borders of our allies. And then the longer-term solution is going to be through innovation. And that's where our team at the Department of Energy is working very hard to advance processing technologies, to advance, as I said, subsurface mining technologies, mining equipment technology. But then also recycling is something that we're very excited about, as I know you are up here in Canada as well. And we call it urban mining. There are so many opportunities to recycle, reprocess, reuse existing metals and minerals that historically we haven't, and that is going to change.
Okay, excellent. And, one of the big challenges we see in the headlines is we see the West, led by the United States, wanting to re-engage, redevelop its processing capacity. But one of the interesting ironies is we are actually seeing here and there, we see processing facilities closing down because of costs and cost of energy. I think we recently saw an aluminum smelter close down. And so how do you think of that? And how do you frame that problem in your head? And how are you approaching that?
Adrian, it is an absolutely important question, and it's a great one. The economics of this industry over the last 30 years have been changed, and I would say, frankly, manipulated by the ability for certain countries to not necessitate economic production. And the result of that has been uneconomic production in other countries around the world. And that is not a sustainable way to run a business or to run an industry. As you know, in the United States, we are a capitalist system. And if you are not making money as a business, you probably won't be in business for very long. And unfortunately, the volatility in prices has led to really the decimation of this industry. We used to lead the world 50 years ago. Today, we are significantly dependent on foreign nations for both processing and refining. So yes, it concerns me. And how do I square it? Most of those facilities that you're seeing that are closing are older facilities that have older technology and are highly uneconomic and inefficient. That is not how we're going to win this game. We don't win the game by doing more of what was inefficient a long time ago. We're going to win this game, and we are going to win this game not alone, but with our allies by deploying new technologies, by innovating around and above the existing forms of processing. I was at a refinery 4 days ago. Novel way for processing lithium. That will change things. They use far less power. They use far less water. Those are the innovations that are going to allow us to expedite the development of these resources on an economic basis, which is a stable basis and also has the ability to really change the landscape. That's where we want to play.
Indeed, it is so interesting. I mean, you hear of bioleaching, for example, is a very exciting area. And what's so interesting about it, too, is it sounds like, in a sense, embracing science and technology is really what you seem to be doing. which seems to be, a good strategy. Now, just in terms of the rare earths, we have this huge issue with processing. How is that issue going? I mean, it's kind of front and center, let's say, since April, and really resources were percolating up, we might say, into the news, to the front page, but it really became front page news as of April and hasn't really left to a certain degree. How's the rare earth situation going? Because you hear from the experts and they say, this could take 10, 20 years, right? So what do you think?
So I would go back to my prior comment on innovation. Yes, rare earths, as you know, they are not rare at all. They are just in very low quantities and difficult to extract and process, and to do so economically. That is the challenge. That is a challenge that we believe is not insurmountable. That between the power of AI, the power of ingenuity, entrepreneurship, and what we like to say is, the American spirit of innovation, which I know we share with our Canadian partners and many others around the world, we will find a way to make the rare earth shortage of supply and processing dilemmas. We will find the solutions to those. It doesn't happen overnight, but it has a concerted effort and it has dedicated support, and we will figure out how to make that work because we have to. Truly, the reason critical minerals are critical is because they underpin our economic success, our national defense and national security, and our energy security. We are nothing as a nation if we do not have those three things. If you cannot protect your borders, if you cannot power your communities and your businesses, if you cannot do all of those, you don't have an economy and you don't have a strong nation. We will be unrelenting to solve this problem, and I have full faith that we will.
Indeed, a U.S. Senator, I can't remember the name, but put it beautifully, the building blocks of the supply chain, which I thought was a really nice way of terming it. Just a couple more questions. Just in terms of stockpiling, we heard of this huge initiative. Does that apply to your office, or is that a separate area?
No, absolutely. I neglected to mention the Export-Import Bank in our multiple weekly meetings. They are a critical component to helping solve the critical minerals shortage for our large economic partners. And absolutely, we are working hand in hand with the Export-Import Bank, again, as a technical resource for them. So think of the scientists, the engineers, the metallurgists, those are in our department. That is where we can come in and be a valuable partner to not just our other government agencies like the Export-Import Bank and this exciting Project Vault, but also to OEMs and other companies that are looking to participate in the stockpile as a way to help connect them and validate those resources that they're looking to bring into the vault.
Okay, excellent. And just on that, I mean, there is this kind of tension, which I'm sure you've considered, which is if we put $12 billion into stockpiling, what does that do to the prices of these things? So do you have any thoughts on how they're approaching this? Maybe you can't say because that screws up the market, strategy, so to speak. I don't know. Do you have any thoughts that you could add to that?
I would say, unlike maybe other stockpiling efforts by other nations or other stockpiling efforts in the past of other commodities, the vault is really driven by the end consumer. And so this is driven by third-party companies looking to secure their resources, not by the United States government telling them what to buy and at what price. So in many ways, I believe the vault is allowing companies to take advantage of existing dislocations in the market and not dislocating the market itself.
I think that's very helpful, actually. So in a sense, it's more of a facilitator, so to speak, for these companies rather than the agent, so to speak, or
this is not a
prime mover.
This is not a government stockpile the way the Strategic Petroleum Reserve is. This is not that.
Okay, that's very helpful, actually. And so as we wrap up here, Assistant Secretary, you're here at PDAC, this gigantic conference. What do you hope to achieve here? What are you up to here at the conference? What's going on?
Well, Adrian, this is my first time at PDAC, so I'm very excited to be here and meet many of the people that we've been working with over the last 6 months across the mining industry, to meet them in person, to meet their teams in more detail. We're here to help drive innovation for the United States and our allied partners. We are that hub of science and innovation. We have announced last year over $1 billion of funding into this space. I think you will see that numbers at or above that this year from our office, looking to find innovative ways to drive forward growth and innovation in this sector in a very meaningful way. So I'm thrilled to be here and meet more of the great men and women in the mining industry, not just in North America, but around the world.
Assistant Secretary of Energy Audrey Robertson, who manages the Office of Critical Minerals and Energy Innovation. Thank you for joining us. It's wonderful to meet you.
Adrian, thank you so much for having me. Have a great PDAC.
And it continues here at PDAC, Day 2. Another wonderful guest here. We have Gerald Panetton, Chairman and CEO of Terra Resources. Gerald, welcome to the show.
Thank you very much, Adrian.
So tell us, another interesting personality and individual showing up here at the podcast. Could you give us a little bit of background on what you're working on? You're at Terra, but you actually have quite a history.
I do. I'm a geologist of many years of working in the gold industry, exploration, development, mining. I spent 12 years at Barrick, which was my school, basically. I was working with tremendous people from 1994 to 2006, or January 06, when I left. And, I think Barrick was a great, great place for many people to learn so many things about not just exploration, but all the way to production. I think it's a great example of a Canadian company success. And from that, I started Detour in 2006 after buying the asset from Pelangio Mines, the Detour Lake asset, which we know now is the largest gold mine in Canada. So there's no question that, good schooling, good nose for good assets is a very big part of what we can do in Canada. And I was very happy to be able to get a chance and get the opportunity to find all those ounces and develop the mine all the way to gold production.
Yeah, incredible.
In 6 years.
And you're talking about the Detour mine.
Yeah.
Yeah, and now
from IPO to gold pour in 6 years.
Yeah, and that's like Nico Eagle's property now, right?
It's actually their flagship now.
Incredible. So,
generating a lot of job for many, many years in Northern Ontario.
Yes, indeed, and that is worth mentioning. Part of the benefits of the natural resources industry are economic and bringing, changing people's lives with jobs and opportunity. So you're with Terra Resources now. So what's the latest, Gerald? What are you up to now?
It's been 6 years already that I've joined Terra, which was founded by Joe Campbell, a very famous geologist in Canada that has done extremely well over his career. He currently still is our QP. He's a tremendous person, and I kind to help him redirect, re-strategize the company 6 years ago. And then we hit the junior drop. For 2-3 years, there was no money around. We kept doing a small financing at a time. Our market cap went down to $20 million. It was terrible. 2023 to August 2025. 2 years of suffering. And I'm not the only one. I'm talking for the whole industry in exploration. It was tough.
Despite the headlines that we were seeing, because we were seeing natural resources were starting to move up in the, getting more attention, but still the juniors and the exploration companies suffer.
Adrian, it's very simple. The people that reap the benefit of a higher gold price are the producer. So it falls down eventually on the explorer. But gold started to move in the fall of 23, 2 years and a half ago, from $1,800 to $3,200. But what we saw from August to today, from $3,200 to over $5,000, is a very different pattern. It's like, wow. Look, I built Detour when gold went from $450 to $1,900 an ounce. Timing is everything. You could be in the wrong period of investing where you cannot move anything. However, if you're patient and you believe in the asset, which we do, we stick to the asset. Our shareholders stick to us, and we reap the benefit now from going from $20 million market cap to now roughly over $100 million.
So you're above $100 million market cap, and I'm sure Dean...
And it's nothing.
I'm sure Dean McPherson at the TSX and TSX Venture Exchange will be happy. He's always looking for those companies to try and do what you've done. And so things have improved then for you. And so tell us about your asset, tell us about your project that you're working on. Where is it? What do you have?
Yellowknife, Northwest Territory, right in town, infrastructure supported, less than $300 per meters to do our drilling exploration. So it's not remote.
So drilling is cheap. Is that what you're saying?
Drilling is cheaper when you're in town versus in the boonies. You know, we don't rely just on winter road or helicopter supported.
Right.
We
and
have all the access.
money.
Everybody
right.
goes home at night.
Right.
Everybody
right.
can go to Tim Horton or a Starbucks.
So that makes a huge difference.
Of course.
It's not just the moving the rock part.
There's
The whole
no question.
Right.
When everybody can go home at night, it's much cheaper.
Right.
I mean, it's expensive to live in Yellowknife. Don't get me wrong.
Sure.
We're not going to
I'm
see.
sure the milk is expensive.
It's like, but it's cheaper probably than Vancouver for a living, somehow. You know.
Yes.
But you know, Yellowknife is currently at a very big turning point. The diamond mines are closing. Exploration efforts in the territories has been declining over the last 20 years drastically. We are only a few players exploring in the North territory, which has tremendous potential. But Gold Terra already control most of the belt on the Yellowknife side, which means we control 50 miles of the Campbell Shear. The Campbell Shear produced 14 million ounces of gold between 1938 and 2003, when Miramar shut down the Con mine. When gold was 340, the cutoff grade in the mine was 10 grams. What do you think the cutoff grade could be today?
I don't know. What do you think the cutoff grade could
Well,
be?
the QP will...
If you're allowed to say, Gerald.
Well, the QP will do his job, but we have a 2022 MRE at 1,700, and our cutoff grade was 3.5. So just assume 3.5 gram. From 10 to 3.5 gram, there's already a big difference. So we believe that the project is very good, just with 1 million ounces near surface. We signed an agreement to purchase the Con mine 4 years ago with Newmont, purchasing Miramar Northern Mining Limited, which is the owner, the private company owns by Newmont that owns the Con mine. And we've spent lots of drilling, lots of money. And I think in 2026, we have 4 big catalysts. Finishing the Con mine acquisition, an MRE update in 2 steps, plus a PEA. So in 2026, you should watch Gold Terra because the re-rating will come. If you think we're undervalued, that re-rating now is going to be written differently over the next 12 months. It's an opportunity.
Exactly. So, I mean, my last question for you, Gerald, was going to be, what is your message to investors? But it sounds like you've just told me it's an opportunity. But put it all together for us, consolidate everything you've said here. What is the opportunity here for investors?
It's an option to buy gold at $30 an ounce with a management team who has built multiple mines, that knows what they're doing, that can take the project all the way from the current status, which is advanced development or advanced exploration, into a mine over the next 3 to 4 years. We have a brownfield project with the Con mine, which we call brownfield, means we have surface rights and mining lease. I tell people, how do you think I built Detour in less than 6 years from IPO to gold production with permitting process which was less than a year because we had the surface right and the mining lease. The Con mine is offering exactly the same thing that the Detour Lake story offered me 15 years ago.
Gerald Panetone, Chairman and CEO of Gold Terra Resources, thank you for joining us and sharing your very interesting project that you're working on over in Yellowknife.
Thank you, Adrian.
And we are continuing our coverage here of the PDAC convention. We have another esteemed guest joining us. This time it is David Prodger, Deputy High Commissioner for the United Kingdom. David, welcome to the show. It's great to meet you.
It's great to be back at PDAC. I love it here.
So you've been back. So you've been here before.
Yeah, so this is my 4th PDAC. And we decided back in 2022 that critical minerals and mining was an area where UK, Canada should be talking more. So every year in PDAC, it just gets better and better from a UK perspective. More and more interest. If you look at the sort of geopolitical situation now, critical minerals is at the center of everybody's minds. And we're 2 countries and amazing mining heritage. So it just makes sense for us to be here, and it's great to be back.
It is so interesting. And, it's, to your point, like I remember I've been doing this since 2012, being involved with the mining sector. And I remember the down days of 2016, early 2016. So in a sense, 2022 actually sounds relatively early, for it to start to become, a place of importance for the UK. So it's quite interesting in that regard. So you've been doing this for a little while. And so how is the UK approaching this? I mean, when I think of the UK with mining, I think of Cornwall, I think of tin.
Yeah.
How's the UK kind of seeing things right now in regard to metals, mining, and processing?
So you're right, we've been doing it for 3,000 odd years.
Famously.
Yeah.
You know.
So there is a massive heritage, obviously, with our schools of mines and so on, but London as a financial centre, particularly for sustainable mining. So what I found interesting, the reason I came to this when I took up my post in Canada was under our 2021 G7 presidency, we had started focusing on critical minerals as part of that group. And we understood that at that time, we were just thinking about global competition, what we were going to need to remain competitive, to grow, and to have that strategic independence that we needed. And it was evident back then that critical minerals was going to be at the center of all of this. Whether that was in tech, whether it's advanced materials, whether it's aerospace, you name it, critical minerals was going to be part of it. What we also realized was that we didn't really have a consensus about how to go about developing that capability. And when you talk to the miners, it wasn't an easy period in many sense. I mean, we saw what was happening with nickel prices and so on, and also in the markets with London Metals Exchange and so on. So it just felt as though UK Canada had an interesting and useful story to tell. Obviously, since then, it's only become more important. It's become very much front and center of all of our geopolitical conversations. Now, with the release of our critical mineral strategy autumn last year, we've made it pretty clear that this is going to be driving our industrial strategy. And in the UK, our industrial strategy is based on those areas where we think we have global competitive advantage. So it's things like financial services, but also advanced manufacturing, tech, defense. Many of these are driven by critical minerals and access to them. So it is now very much at the heart of our government policy, and obviously we're trying to make it part of our commercial policy as well. And partnerships with Canada are very much core to us being successful.
Yeah, it's quite interesting how you bring up the financial side of things, because one of the big issues, as you well know, with the mining sector is this kind of undercapitalization that has occurred, which is changing now. But in a sense, one of the reasons why China has done so well is because they say, we'll just put a bunch of money towards this, and it's okay if we aren't making money the first 20 years, whereas, the capital markets, they kind of want to see profits, right? So is that one way, when you say financial, services, is that one way, in a sense, you feel that the UK could help, in a sense? Is that a part of the strategy, or is that...
Yeah, absolutely. I mean, we were hearing this morning from our chief scientific advisors from our Department of Business and Trade that the London stock markets had one of the best quarters in IPOs in the for recent memory, last quarter. It's a centre for mining stocks. We know that. A lot of the majors are based in London. So yeah, I mean, London always has been and will continue to be a major centre for mining finance. And London and Toronto understand each other very well. So, between our two financial centres, and if you include Vancouver as well, we should have all of the bases covered to provide that finance. What has changed in the last 4 or 5 years is that I think our governments, and mine included, have realised that the market won't be able to solve all of the problems by themselves. And this is because in the critical mineral space, I mean, let alone by the time we talk about copper, iron, the really big minerals, in the critical minerals, particularly the smaller volume ones, is that we need to have a say in how that market develops, and that actually having a single monopoly supplier is not great. And therefore, we need to be able to help the market make decisions over the long term by giving them a degree of assurance, either whether that's on the way those minerals are going to be off-taken, or who's going to use them, or what government's role will be setting market conditions, if that's such a thing. So what our strategy does is it starts to go down that route a bit. It says that we are going to produce 10% of what we need domestically, we're going to produce 20% by recycling, and we're not going to have dependencies of more than 60% on any mineral with any one country. And then behind that sit some of the mechanisms by which we can give some assurance into the market. So, for example, our UK export finance now launched, last year at PDAC was the first real opportunity to launch the new product, which was launched in November before, directly targeted at critical minerals and at mining. So looking at some of those higher risk, early stage projects where you just need a little bit of extra assurance to give a bit of market certainty to help people, the investors, have the confidence to go and invest. And even with some of our our own mining plays, so Cornish Lithium, for example, have UK government investment. They hope to be coming on stream in 2029. They're using a new technology, much lower carbon intensity. They will bring on a significant deposit from Cornwall, going back to where we started, where we've been doing this for hundreds and thousands of years.
It's quite impressive. Yes, I was reading up on those supply chains back to the Bronze Age, incredibly. And so, in a sense, one of the interesting practicalities, the pragmatics, so to speak, of actually implementing these kinds of programs, I was talking to Ian Holland, a Canadian, and he was saying how, Canada needs to pick its battles. We can't do everything. We can't do every metal. We should do maybe nickel. We need to have that discussion and kind of target certain areas, because if we try and do everything, we're going to have problems. And so does the UK see it that way? Like, are there certain metals or certain areas where the UK feels like, is strong and can kind of play that pivotal role?
Yeah. So as part of our industrial strategy and as part of our critical minerals strategy, we have a critical minerals list. So yes, we're focusing on those critical minerals that are going to drive growth for us. The UK is a jurisdiction where we perhaps don't have the same offtake requirements as some of the big multinationals will have in Germany or in Japan or in Korea. But the other part, or one of the other very interesting parts of the mineral strategy, is the aggregation aspect, where if you look, for example, at our advanced manufacturing or our defense industries, they have a huge requirement, or our offshore wind or our net zero industries, they have a huge requirement for critical minerals. But that doesn't necessarily sit with one or two or a handful of suppliers, it sits with many. So the idea that we can explore how we do this together, again, coming back to the point earlier about trying to provide some kind of market signal and market certainty, is one of the areas we're looking at quite carefully now. So we're just going through a mapping process. We're trying to work out what that looks like for the UK economy. And that will then take us down the path of looking at which minerals we require and then how we're going to do it. With Canada, we've already got a lot of links. So, one of Europe's biggest nickel refineries, Clydach in Wales, very much in partnership with Vale. Vale have huge operations here. Obviously, our majors are all active here, whether that's Rio, whether it's Anglo, and obviously the Anglo-Teck merger is at the front of many people's minds at the moment.
Sure.
We've got the world's biggest secondary refiner of platinum group metals in the UK. We refine rare earths in the UK. So it's bigger. Our jurisdiction in mining and our sector is bigger than many people think. There are two areas where I think there are real opportunities. One is actually making this finance piece work. Mm-hmm. The other bit is on the technology transfer. So last year we ran a competition with our respective research and innovation organisations, so the National Research Council here and UK Research and Investment in the UK. It was a multi-million-dollar call for bids into mining R&D. And so I mentioned, for example, Cornish Lithium. They're using a new process. This is something that our miners and our mining companies are really good at, and exchanging that know-how with Canada, including, for example, through our Critical Minerals Intelligence Centre, which is part of our geologic survey, so understanding the geology and how you can get secondary offtake. Those are areas where I think UK and Canada are an awful lot we can be doing together.
Very interesting. And so here we are at PDAC, or the PDAC. What do you hope to accomplish here, in a sense? What kind of things are you looking out for? What's kind of catching your eye, your interest? What's drawing you here? What do you want to accomplish?
So I think for me, because I work in the policy space, we've got an interesting discussion this morning, which is going to be compared by Chatham House, that is looking at market conditions and the role of government and industry working together in how we can do this work to actually provide a bit more certainty, and then what does that look like? So we don't have all the answers yet. We see lots of different initiatives around there. That's great. It bears more discussion, because ultimately this is about the growth and strength of our economies going forward and making sure the market functions. And I think from a UK perspective, there's a bit of this is upstream, there's a lot of this is midstream, and there's a lot of this that is finance and making it happen, because this is critical to our security and growth. So that policy discussion is really interesting, and that's one of the things that PDAC offers a lot of. So if I look at who I'm going to be meeting this week, a lot of it is with the big miners, to hear how they're seeing the market dynamics, how they're seeing what's happening south of the border, what's happening here in Canada, what's happening in the EU and elsewhere. So that's absolutely one of the things we're looking at. The other part is we've got 20 odd British companies out here. They're all going to be looking to do business. And they've got some really interesting capabilities that we'll be helping to explain to people Just a couple of weeks ago, I was out in Vancouver. I was talking to a British company that's using cosmic rays to try and increase the effectiveness of targeting the ore deposits. So there's some really cutting-edge tech out there that British companies are bringing forward, and that can help build those partnerships.
It is super interesting, the whole technology side of things. I mean, bioleaching seems like another super interesting area. So yeah, to your point, and exploration, you get the sense that so much is going on. Well, what a wonderful opportunity to meet you, David Prodger, Deputy High Commissioner for the United Kingdom. It's wonderful to talk to you, and thanks for stopping by the podcast.
Adrian, thanks very much, and have a good week.
Thank you. So our coverage here continues at the PDAC convention. We are on day 2, and I'm very pleased to welcome Bruce Bregagnolo, CEO of Regency Silver. Bruce, welcome.
Yeah, thanks, Adrian. Good to be here.
It's great to have you, and of course, silver has had quite a year, and so it must be exciting times for you these days.
Yeah, it's very interesting. It's good to be here at the PDAC in Toronto. You can see the interest has really picked up year over year. I knew something had changed fundamentally in the silver industry and the gold industry, and 2 years ago at PDAC, when the price didn't get knocked down during PDAC.
Right. The PDAC curse, I
the
believe they call
curse
it.
of PDAC. It used to strike every year. I've been coming here since 1995 or so, and you always try to get everything done before PDAC. But 2 years ago, there was a fundamental shift when the price of the metals didn't get knocked down, and it's been continuing ever since. We've had a very good run the last couple of years.
It's so funny you mentioned that. I think I had a similar thought a couple of years ago. It's like, oh, it didn't go down during PDAC or right after PDAC. That's pretty funny you mentioned that. So you're at Regency Silver. Where are your projects based? What are you working on right now?
Well, our flagship project is in Sonora, Mexico. And that's where my last big project was, at the Timmins gold mine just north of Hermosillo. So now we're 4 hours to the east of Hermosillo, going up into the mountains a little bit in a very underexplored area that has a lot of potential. We're almost on the Chihuahua border. It's just a great place to work. It's underexplored, and there's potential here for some big discoveries in this district overall. There's lots of mines in the district.
Interesting, and of course, Mexico has been in the news recently, of course, security concerns. How do you approach that, and how do you feel about that?
Well, the violence has occurred south of us. It's been confined to Sinaloa and Jalisco, and there's a cartel war going on there, which hasn't reached into Sonora, so we're quite safe where we are. We feel very good about our security.
Okay, excellent. And as far as the project itself, how long have you been working on it? What stage are you at? Are you drilling it? Tell us more about just what you're working on at the project.
Yeah, we first acquired the project in 2017 and went through some very lean years in the market. When silver is $14 an ounce and your cost of production is $16, it's not a good market. But now, we're not a producer, by the way, we're an explorer. So we started off with an old silver mine, and it just looked different. There was something about it, though. I guess it was the grade and the width of the silver mine. Some of the biggest head grades in Mexico are 750 grams per ton silver, and the historic Dios Padres silver mine had 750 grams of silver as an average that had been mined in the past. So we looked at it, and it looked very interesting, and there was an IP anomaly beside it, which looked like a copper anomaly. So we took the copper, we took the silver, we ran it through modern software and came up with a drill program which called for one deep hole at a 45-degree angle right underneath the old silver mine. And on our very first hole, we hit 36 meters of 6.8 grams of gold, plus copper, plus silver. So we hit a very rich zone, and now we're going up dip and along strike along that breccia zone of high-grade gold.
Interesting, and so it was more than beginner's luck, so to speak. It continues.
Well, it takes a combination of experience, I'd like to say some skill, but a lot of luck as well. So you got to have a combination of those.
Yeah, like in terms of the first holes. So the other holes are producing, and you're feeling good about what you're seeing.
Oh, we're feeling very good. We're clearly into a big high sulfidation system. These types of systems are very rare, but they're very rich and they're big. So we just need to continue drilling. Our last drill results were very good. We hit 9 meters of 5.4 grams of gold, and we hit going up dip now towards the old silver mine in basically a blind area. We hit 3 distinct zones of silver, the highest being 9 meters of 155 grams of silver. And one thing I do want to stress, and the general public hasn't really caught on to this yet, the margins in gold and silver are going to be extraordinary. When you see the financial statements of some of the producers, when your cost is $2,000 an ounce for producing gold, and let's say $20 an ounce for producing silver, when you're making $3,000 an ounce for gold and you're making $80 an ounce for silver, the margins are spectacular now. They're way better than they've ever been. So once that starts to trickle through and people start to understand that, they'll understand that the grade is not as big a factor as it used to be because the margins are so good. I had a great discussion with some old mining buddies in Mexico City a few weeks back. We were talking about what type of grade do you need now to be economic. And silver, it used to be needed like 250 grams of silver to be economic. Now it's 45. So it's a huge difference. There's lots of 45 gram silver out there. So you're going to see a lot of mines being put into production that you might not have seen a few years back.
Indeed. In a sense, the industry is changing with these new numbers, right? So it's quite something. So does that mean you work as fast as possible as well? Because who knows what the future holds? I imagine you're working, in a sense, fast right now, and there's a lot of urgency. Am I right, or...?
It's hard to say. We've only got 15 drill holes into this major zone. So we're going about as fast as we can right now with one drill rig. And then we have to see where we bring in another rig later. So right now we're doing exploratory drilling. So it's not quite as urgent for us. But our plan is to drill it and sell it anyway. So we don't plan to be a producer. Although we could. I went to production with Timmins Gold and worked out very well.
Okay, excellent. And I was going to wrap up with that question of where is this going? And in a sense, so what does the plan look like? What does the roadmap look like as we, look off into the next, say, 6 months to 2 years?
Well, it used to be in Mexico, if you had 500,000 ounces of gold, you went to production and you followed up from there. With the markets being what they've been and the equity values being what they've been, that's probably not in the cards right now, but 1 million ounces perhaps. 1 million ounces of gold these days gives you $3 billion worth of margin. That's pre-tax, but it's pretty darn good. You never saw those type of numbers before. So we'll see how the economics of the mining industry shake out. But I suspect we're going to see a lot more mines go into production over the next little while, just because of the better economics.
Excellent. And finally, do you have a message for investors? Why should investors be interested in Regency Silver? What is your message to them?
Well, they should be interested because we're adding ounces very quickly. We've had 3 drill holes somewhere around 38 meters of over 6 grams. Those are exceptional results, which show we're in a big porphyry system here. With the high-grade silver on the surface, with a resource of 11.375 million ounces of silver, with drilling ongoing, you're going to see some good results coming out of Regency in the future. We just have to keep following along and finding more of the same mineralized zones, and things should all click into place for us.
Excellent. Bruce Bregagnolo, CEO of Regency Silver, thank you for joining us and telling us everything about what you're working on.
Thank you, Adrian.
Joining us, I'm very pleased to welcome to the Northern Miner Podcast for our PDAC coverage. Final interview of the day, Kai Hoffman of SOAR Financially. Kai, welcome.
Adrian, thanks for having me. I'm excited about this.
I'm excited too. I see your podcast every so often, Kai, and so it's great to see you in person again. And so how's the conference going for you? What are you up to at PDAC 2026?
Well, it is super busy, right? Everybody's talking about gold and silver price, so there's a bit of positive buzz in the air. Of course, today we're speaking on day 2 of the conference on the Monday. Stocks are down because I think a lot has been priced in recently, especially the activities over the weekend in the Middle East. We're priced in. Silver's taken a bit of a dive, so maybe there's a bit of a damper, but overall, companies are financed, they're excited. And I'm just here to network. Gave a presentation at the Investment Leaders Forum, hosted a panel there with some esteemed investors, so that was really good positive feedback we got for that. And just here to network, just to enjoy the freezing cold Toronto.
Freezing cold indeed. I left 17-degree Paris to go to minus 17. Feels like, anyways. So you're here to network. Now, you've been to several PDACs, though, in the past, right?
Yeah, this is my 15th one, I think.
Wow. Okay, yeah, you're more than me. I took a 5-year break until this year, Kai, after COVID, right? Because COVID struck. Do you remember that? Did you go to that one?
I was there in February. I was fairly naive about the whole situation because we were planning a conference in May 2020. And I said, You know, like we're here in Toronto. I see a few cases. You know, you see 3-4 cases pop up. Like I watch CP24 every morning, and it's like, yeah, 3-4 cases, nothing bad. And I was like, okay, we can host our conference in May, and then we all know doo-doo hit the fan, and that was the end of that conversation, right?
Yes, we are all scarred from that time. So yes, indeed. And so it's been a few years for me. In a weird way, it feels, I don't know if I'd call it status quo, it's like there's an ebullience, so to speak, in the sentiment. But I'm actually kind of surprised. It's what it is. It's a mining conference. But it does feel like, standard operating procedure here, just with like a happier tone.
Oh, absolutely. Well, it's a massive echo chamber, right? Like the dungeon downstairs is just an echo chamber. Lots of hugs, lots of like backslapping going on. Of course, everybody's happy, but nothing's really changed. Like we're still waiting for the next discovery. We haven't seen a discovery in 2 years. Fortunately, there's a lot of money flooding this market now. Like we track that with Oren Inc. It's our own data company, but it hasn't been bad over since 2022 actually, or since 2021 actually. There was enough money available. We just haven't made the discoveries, which means it's more challenging, of course, right? And if you go downstairs, it still looks the same like 15 years ago.
It does. It's visually, it's the same, to your point. And it's kind of interesting, like, once in a while, you've been to so many of these conferences, you know what it's like where, I don't know if you remember that time, and I don't even remember the conference where there's talk of Barrick and Newmont merging, and that's what everybody was talking about. I guess it's Iran. Has there been any kind of like dominant, like in your discussions and in talking to people, what's coming up?
I think people are aware, just cautious actually. Like all of us have been slapped over the head or punched in the face so many times investing in mining or in the mining stock. So we're all a bit wary of where this might be going. Like gold at 5,200, silver back at $95 this morning. It's now down to 88 or so. But the volatility, of course, is top of mind. But also, do we take money off the table? Like a lot of keynote speakers are talking about selling. And not selling 100%, but just taking gains off the table and informing people like on how to sell a mining stock, right? Not just buy, but how to sell.
Well, indeed. Like I was at the Vancouver Resource Investment Conference and talking to Rick Rule on the floor there, and he's like, I sold 80% of my silver stocks, and he was basically saying, I'm not trying to get the top or the bottom. I just want the big chunk in between. And it's so much harder to do selling than buying, isn't it?
It's dangerous not to fall in love with any of the stocks you own,
completely.
right? So
and the feeling that you have when you open up and you see all the green and you're just kind of, your mind is bathing in your riches.
Well, you got to be careful not to confuse a bull market with brains, right? That's what Rick says as well.
Indeed.
And it is dangerous because the one thing I might have learned over the last few years is put more money in your high conviction plays.
Something you should do.
I should have done actually, because
Gotcha.
I sort of had my favorites, but I didn't have enough money in it. Now I'm looking at the portfolio, it's like, if I would have put more money into my high conviction plays, maybe we're not chatting today, right?
Right.
I'm exaggerating,
You'd be
of course.
you'd be on the island in
exactly.
the Bahamas,
I might be where it's 30 degrees, not minus 10, right? Right? But that's one thing. It's conviction and patience. Those are the two things, and that's maybe one of the takeaways from my keynote there at the Investment Leaders Forum as well, because that's something I've learned. Like one of the stocks I personally own and I still own is like Montage Gold. I recommended it also on the floor here last few years. It's up 2,400%. But
Incredible.
Again, I didn't put enough money into it. It's great. It looks fantastic in the portfolio. It would have looked greater if I had 3 times the money in it. Right?
It's funny. I know a friend who, independently wealthy from crypto, and he was telling me just maybe 2 months ago when I last saw him, conviction is maybe the most important thing, which was quite interesting.
Yeah, conviction and patience. It's like if you're really convinced that the projects will work, like you might have done a site visit or you actually have some insights that, okay, this will work, this will turn into a mine. Maybe not tomorrow, but it's on the right track. You got to have that patience to let it play out and just put enough money behind it that if actually it does work, then you can actually profit from it. It doesn't mean you have to allocate 100% of your capital into one stock, but maybe just a tad more into those 3, 4, 5 names that you're fully convinced, and the rest is just noise around it that you can play the market with. But if you have those names in the portfolio, might as well allocate more money to it.
Now, in terms of, what are your big picture plans? Like you're with this, is it the Frankfurt Messe conference?
The Deutsche Goldmesse, yes.
The Deutsche?
Goldmesse, so the German gold show.
Okay, Deutsche Gold Messe. Now, in German, Geld. Is it Geld or Gold?
Gold.
Gold. Okay, so it's not Geld. Okay, yeah. I should know this after 9 years in Berlin. But so it goes. So these are the main things you work on. You have your YouTube, you have the Deutsche Gold Messe.
Yeah.
Tell us what you're
Yeah,
looking
we
out
build
to.
a really holistic ecosystem. Like our goal is to really produce value for the companies when we introduce them to our network in Europe, mostly German-speaking network. We built a conference, which is a fantastic lead funnel. We have 40 companies presenting there twice a year to about 250 investors. So it's a boutique event, but very targeted. It is an investment conference. And then we have the YouTube channel. We do roadshows and many other things into the European market as well. But it's all based on that database that we've created. So it's a really nice ecosystem, right, for the German market. And I think it's unparalleled what we've built there. And we work with some really good names like Westome and many others that come out, First Majestic, that enjoy our services, right? And it's fun.
Yeah, no, and very interesting. And like, as far as I remember your YouTube, and I've actually watched quite a few shows over the, at least the last 2 or 3 years, it seems like it's English language. So is that the case, or do you also do German language? Tell us a little bit about that.
Well, we're working on a German language channel, so maybe you're getting the exclusive scoop here. I haven't really told that anybody else.
I'm probing.
Right, but the main channel is, of course, in English. A lot of the guests are English speaking.
Right.
So it is easier to do it in English. But we're working on some German stuff as well. But it really helps, like a lot of visibility, because we discuss the macro to understand the micro, meaning like we were trying to understand, okay, why didn't the mining stocks move back in the day? That was sort of the original idea of the podcast.
Right.
We discussed the macro situation and then trying to figure out, okay, what does the Fed have to do with the mining stocks actually, right?
Before you know it, you're talking about Iran.
Exactly. Right,
Yeah.
geopolitics are definitely front and center these days on our channel. We have some fantastic guests, and we get a tremendous amount of views because the interest is so high. But
It's crazy, isn't it? Like these geopolitical channels that you see on YouTube are doing, especially now, say with Iran. I was looking at some of the numbers; they're incredible.
Yeah, it's really difficult to find unbiased information. So you try to find your own sources. You're trying to find people that you think you can trust, and I think that's why these YouTube channels, like all of them, are working so well.
Okay, excellent. So it's Soar Financially is the YouTube channel. Any final words, Kai, as we part?
No, I think we're in for a fun few years here in the mining space. I don't think we've seen the end of it yet. Still very, very early innings, to use a baseball analogy here. Couldn't even tell you what inning we're in right now, because all points to higher prices, or at least stable prices in the precious metals, which will carry the mining sector, and I'm here for it. So I've been doing this for 15 years. First time I'm experiencing like the euphoria of a proper bull market, and I hope it lasts.
I can relate. I started in 2012, and yeah, it's like we came in just as we were like losing the last kind of great bull market. Yeah, okay, maybe after 2015 it kind of rose, but it wasn't the euphoria.
No.
Or in the what we're seeing today.
No, I've seen the events over at the Fairmont here back in 2011. We're still far, far from that. So
Indeed, and it was a pretty depressed few years in between, wasn't it?
Absolutely.
So anyways, it's great to meet you again, Kai. Kai Hoffman, Soar Financially. Thanks for joining us.
Thanks, Adrian.
And that wraps up our second day of coverage here at the Prospectors and Developers Association of Canada conference. Big thank you to Gold Terra Resources and Regency Silver for sponsoring this episode. And also a big thank you to all our guests, people at PDAC, and everybody who's listening. Stay tuned tomorrow for our third and final day of coverage at the conference.